Welcome everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates.
Hey, welcome back everyone. Guess what? We still have the largest business of its kind on the planet, and we still have a job to do. Not only is AMC the largest company of its kind in the world, it's the best in its class, in my opinion. And it's easy to lose sight of it when they're kicking the shit out of the stock every day. That's exactly what they want. Now, not one of our competitors has a distribution business like ours, a popular retail popcorn line like ours, a branded credit card program like ours, or a thriving movie merchandise business like ours. You know what they definitely don't have? They don't have the apes. And I think we're starting to lose some. Now, I also think our stock is worth more than 37 cents per share on a pre-split basis, not investment advice or advisor. A reverse split, by the way, we never needed to do, but Wall Street desperately needed it. So Adam Aron and Derek Van Zandt of Citi delivered it to them on a silver platter, and the habit of accommodating Wall Street continues to this day by AMC senior management. Now, it's my sincere belief AMC will outlast the Hedgies, its shitty CEO, and all its critics in the financial press. People, CEOs and boards, they come and go. AMC has been around for over 100 years. While I have zero confidence a victory will come from Adam Aron, stock market reforms, or even another return to profitability for the company, I still believe it'll be an event that adversely affects our enemies, that will deliver the AMC shareholders from the grip Wall Street has on our stock and on its senior management team. So let's get into the news concerning our business. They're supposed to work for us. We own the company. From the Hollywood Reporter, Godzilla x Kong, the new empire, stomps to record 10 million in box office previews. Get this from the article. Godzilla x Kong hopes to leave a big footprint when marching into theaters around the globe this weekend after starting off with a record 10 million in Thursday previews. The best showing ever for Warner Brothers and Legendary's Monsterverse library, as well as the best preview of the year to date. First quarter's over. Let's get to work on Q2. F you, Hedgies. F you, Gasparino. F you, Susquehanna. Where's the one place the Hedgies can't cheat? The box office. From Sunday morning deadline, they have risen. Godzilla x Kong conquers Easter box office with $80 million opening. Legendary Monsterverse franchise crosses $2 billion. Sunday AM box office. The theaters are dead, right? You see, guys, word is getting around this weekend. If we didn't have a CEO that earns 4 times more than the CEO of Cinemark, if we didn't have a CEO that invests our money in bankrupt gold mines while we were over $5 billion in debt ourselves, and if we didn't have a CEO that blows $25 million on in-theater commercials instead of commercials promoting our A-list program or our retail popcorn, maybe we would have been more profitable along the way. From the Hollywood Reporter, Sunday again, Godzilla x Kong, the new empire roars to monstrous $80 million U.S. box office opening. That's well ahead of expectations and is another major victory for Warner Brothers and Legendary after Dune Part 2, which has crossed the $600 million mark globally. So, Uncle Frank, why do you think we might be losing apes? Look at the weekly chart. Look at on-balance volume. That used to be one of the best things about this play. No matter what the Hedgies did to the apes, they held and bought more. No matter how many times Adam screwed them with poorly timed tweets about bankruptcy risks or dilution announcements and selling stock through our enemies to our enemies or selling our precious stock at near record low prices. At this stage in the game, you can stop blaming Shill, stop blaming Kenny. This was all Adam, and you know it. Let's start with a headline from the Financial Times. Why good news for Japan may be bad news for hedge funds. After 3 decades of corporate stagnation, there's fresh momentum, but not everyone is pleased. Well, guys, the hedgies are having a hard time negotiating the waters in Japan, which adds another challenge to the long list of things that can hurt them going forward. That's the only way out I see. If the hedgies and market makers are going to run all over us while the regulators do nothing, and Adam and our management team are willing participants, all that's left for me to focus on are events that could lead them into precarious situations that would force them to cover. Just like Archegos and Credit Suisse, only this time even worse. So there are 6 things Uncle Frank loves and we need to be looking for, and I promise you, it's not the 6 guys on the screen. Number 1, when hedgies are short and they get caught in extended rallies. Number 2, when people demand their money back from the hedge funds. This is known as outflows or redemptions. Number 3, when people stop giving money to the hedgies to manage. Number 4, when regulators, governments, the Fed, politicians, and/or law enforcement crack down on hedgies due to cheating and over leverage, even though the current regulators only really care about hedgy over leverage because it can hurt their masters politically, right? Number 5, when black or white swan events suddenly emerge, driving prices in the opposite direction the hedgies are positioned, causing a liquidity crisis and ultimately margin calls, right? And number 6, my favorite, when these things all happen at once. Well, on your screen, here are the 6 guys running your stock price into the ground while taking as much money as they can from your company. Let me ask you some honest questions. Do you see anyone with previous theater business experience on your screen? How about anyone with precious metals mining experience? There sure is a lot of Wall Street experience on the screen, especially in the area of distressed credit, right? If you still trust these guys, please don't bother commenting. Unsubscribe. Go follow YouTubers that tell you what you want to hear. I'm a shareholder activist. I'm going to continue supporting the company and the stock, and I will continue to fight these guys until they're gone or do anything that enhances shareholder value instead of just their own pockets. It's my sincere hope Adam Aron spends the rest of his natural life in a courtroom defending what he did. And what's this item from Broker Blog, guys? Is this AMC's chief investment banker, Derek Van Zandt of Citi, the co-author of The Ape, the Pounce, its conversion, and the reverse split? All the things Adam Aron fanboys and yes-tards still seem to love, apparently. Let's read. Derek Van Zandt facing allegations of fraud. A broker registered with Citigroup Global Markets is facing an investor dispute. This disclosure appears on his broker check record, accessed on February 13, 2024. On October 16, 2023, an investor named Derek Van Zandt in a dispute. The dispute alleged that Citigroup Global Markets defrauded AMC investors by issuing AMC preferred equity shares. You mean the ape? And here's Adam Aron's latest round of smart dilution. With over $800 million in checking, Adam decided to announce on the very last day of trading for the month and the quarter, before the market opened, on options expiration day, that he intends to plow out of more stock at record low prices. Who does he choose to distribute our stock? Well, Citi, of course, a short seller and/or put holder against AMC. Or Barclays, a short seller or put holder against AMC. And of course, Goldman Sachs, another short seller and/or put holder against AMC. and the most prolific spoofer of our stock. Why should we worry? I mean, I'm sure these people are going to be fair and impartial, right, when banging out of the stock. Meanwhile, guys, I want you to know I'm as disappointed and disgusted as any of you are. None of us ever wanted this to be a long-term play or a lifelong commitment, but it is what it is. You should always seek professional advice when making financial decisions, and I'm speaking only for myself when I say I've decided to see it through to the end. I was nibbling on Thursday, and I will continue to fight for the integrity of the stock for as long as it takes. This is not financial advice, and I am not a financial advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. So where is the one place they can't cheat? That's easy, at the box office. I want you to remember that if you're sticking with this company, it's my opinion that no matter what lies ahead for the stock and the company, I would rather face that uncertain future with explosive top-line revenue. Here's the headlines. Godzilla x Kong already breaks box office record, eyes huge opening weekend. Godzilla x Kong just set a MonsterVerse record at the box office. The more of this, the better. So guys, I want you to know that the Kingdom of the Planet of the Apes comes out on May 8th. Let's say there are only 263 million shares of AMC out there. That's what it says on Yahoo, but who knows how many right now, right? Adam and company have gone out of their way to say they've never seen any evidence of synthetics. And let's also say there's only 3 million apes left. That means if each ape only owns 88 shares, we own the float. Am I right? I own over 1,000. Something is not adding up again. Now, this is not investment advice. I'm not an investment advisor. But what if 3 million apes actually bought 100 shares on May 8th? Would that mean we bought the entire float again? Now, I'm not recommending that. Don't get carried away. That would be wrong. But how many times over can you buy a float in the age of Gary Gensler? I think it's a fair question. Now, stick with me, guys. So if 3 million apes each only own 88 shares, which I think is bullshit, what about institutions? Let's go to Fintel.io. According to them, AMC has 373 institutional owners that have filed with the SEC. These institutions hold a total of 76,462,000 shares. I put a big red arrow on the screen so you can see that big recent spike in institutional ownership for AMC. So, if 3 million apes hold 88 shares each, and that's 264 million, that's the float, and if institutions own 76.4 million, that's 340.4 million right there. What is that? About 129% of the float, right? And you want me to believe Adam Aron doesn't know that. After 9 years at Apollo, you want me to believe our CFO, Sean Goodman, from Morgan Stanley Mergers and Acquisitions, doesn't know that. You want me to believe Derek Van Zant, our chief investment banker from Citi, doesn't know that. So after all the FTDs, after all the times we appeared on the threshold list, after Wall Street made more money loaning out AMC than any other security in the world in 2023, you want me to believe these guys have seen no evidence of synthetic shares. So when we're using Citi, Barclays, and Goldman Sachs to sell our AMC, all short sellers and or put holders against AMC at one time or another, you want me to believe they're not selling this cheap stock to their best clients, which are hedge funds, so they can cover and close their shorts. You don't think that would be a conspiracy to commit securities fraud? And for the yes voters and Adam Aron fanboys out there, if Adam actually does that, sells the company stock through short sellers to short sellers of AMC, will you still support him even then? A headline from the Daily Caller, Very, very dangerous. Ron Paul tells Tucker Americans should prepare for black swan event. Subscribers to this channel know Uncle Frank is on constant swan watch, so please subscribe, hit the like button, and share on social media so this information is widespread, especially among the apes. Ron Paul of Texas warned Tucker Carlson in a Tuesday evening interview that a so-called black swan event would pop up and Americans needed to prepare. Paul, who served 12 terms in Congress in 3 stints, discussed the war in Ukraine, attacks on his foreign policy views, and the risk of World War III in the interview with Carlson. Paul warned that education is necessary for those seeking to get through the event. Quote, "I think we're reaching this point where some sudden thing is going to happen," Paul told Carlson. "I believe in that theory of the black swan. It's going to pop up, and it's not going to be controllable. A black swan event is defined as an impossibly difficult event to predict that has extremely widespread consequences that challenges basic assumptions, according to the Corporate Finance Institute, which cited 9/11, Brexit, the dot-com crash, and the COVID-19 pandemic as examples." The Uncle Frank Finance channel may be small in comparison, but I always present the facts to my viewers along with my personal take on matters. I'm not afraid to discuss uncomfortable truths with my viewers, and my critics rarely debate the facts or opinions I lay out in the chat. They just insult me or call me a shill. I can't put black swans on the calendar, guys, but we can discuss them and prepare for what's ahead, starting with the Fed and all the rate cuts everyone has already priced in. I've got to be honest with you guys, this chart isn't looking that good. Change in prices from year before, right? And Uncle Frank believes the PCE reading we got on Friday was bullshit, mainly because everything was in line with expectations, but many of the input factors PCE draws on were all elevated, which is suspicious to me. Let's read. Jay Powell and inflation data set to shake up markets over the holidays. While markets in the U.S. may observe closure on Good Friday, investors remain keen on monitoring significant economic events for the week, including updates on the Fed Reserve's preferred inflation gauge and insights into the state of the American consumer, along with remarks from central bank chief Jay Powell. Inflation, which has notably decelerated since its peak in mid-2022, is a key focus, with concerns arising regarding the trajectory of price pressures and borrowing costs amid the ongoing election cycle. Yeah, that's what it's really about. Economists anticipate that PCE price index likely accelerated in February. It did, driven partly by higher gasoline prices. Despite excluding food and energy, the inflation metric is expected to remain high. Conversely, consumer spending is forecasted to have gained momentum in February, buoyed by a robust labor market and increasing incomes. This optimism is further fueled by the upward revision of economic growth for the final quarter of 2023. While the Fed stands prepared to support the job market if necessary, Jay Powell's recent comments, along with those from Fed Governor Christopher Waller, suggest a potential rate cut later in the year, albeit without immediate urgency. In other news, various headline economic metrics for the U.S., including GDP and GDI, demonstrated robust advances in the fourth quarter, while consumer sentiment reached its highest level since July of 2021, supported by stock market gains and easing inflation expectations. Looking ahead, key events include the release of the PCE price index for March. We're going to get that on April 26th, so we'll get that on the calendar. What's the conclusion, Unc? My take is we're not getting a rate cut as soon as everyone would like. If we do, it'll be for political reasons. Inflation was not transitory, and this is why we should always get out ahead of it, because once it's out, it's extremely difficult to get that cat back into the bag. Uncle Frank is excited because he is long a heavily shorted theater stock, which historically does great during recessions. Not investment advice or advisor. He's also long XRP, what I consider to be the best mousetrap in the world when it comes to cross-border payments, and has the potential to unlock billions in liquidity almost instantly, which everyone needs right now like the desert needs the rain. So, the shorts on Wall Street better remember that it's hard to beat people that'll never quit under any circumstances, especially once you've artificially beaten down their stock 95%, and they would rather lose the whole thing than sell to help you out of your trade. If you ever wonder why Adam Aron never does anything to help the price of the stock, that's simple. He isn't helping Wall Street. He is Wall Street. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.